The United States Citizenship and Immigration Services has just dropped a bombshell announcement that could affect thousands of families trying to bring their loved ones to America. If you're sponsoring a family member for a green card or planning to do so, the new income requirements announced this month might completely change your immigration strategy. Stay with me because what I'm about to share could save your family's immigration case or help you avoid costly mistakes. Welcome back to the channel, everyone. Today we're diving deep into the most significant immigration policy update we've seen in months. The Trump administration, through USCIS, has just announced sweeping changes to the financial sponsorship requirements for family-based immigration, and these changes are already causing confusion and concern across immigrant communities nationwide. Whether you're a U.S. citizen trying to sponsor your parents, a green card holder hoping to bring your spouse, or an immigrant already in the process, this update directly impacts your case. I'm going to break down everything you need to know in plain English, explain exactly how these new rules work, who they affect, and most importantly, what you need to do right now to protect your family's immigration journey. Let's start with the fundamental question: what exactly has changed? Under the Immigration and Nationality Act, anyone sponsoring a family member for permanent residence must demonstrate they can financially support that person at a level above the federal poverty guidelines. This prevents sponsored immigrants from becoming what immigration law calls a public charge, meaning they won't rely on government assistance programs. Previously, sponsors needed to show household income at 125% of the federal poverty guidelines. For a family of two, that meant roughly $24,000 annually. For a family of four, around $37,000. The new announcement from USCIS significantly raises these thresholds. Under the updated rules rolling out this month, sponsors must now demonstrate income at 150% of the poverty guidelines, and in certain cases, even higher. This represents a roughly 20% increase in the financial bar that sponsors must clear. For that same family of two, we're now looking at approximately $29,000 annually. For a family of four, the requirement jumps to about $44,000. These aren't small increases. For many working-class and middle-class American families, this additional financial requirement could be the difference between successfully sponsoring a loved one or facing denial. But it gets more complicated. The announcement includes provisions for enhanced scrutiny of sponsor income sources. USCIS will now conduct more rigorous verification of employment, requiring not just tax returns and W-2 forms, but also recent pay stubs covering the most recent 6 months, employment verification letters on company letterhead, and in some cases, direct contact with employers. Self-employed sponsors face even tougher standards. Business owners must now provide additional documentation, including profit and loss statements prepared by licensed accountants, business bank account statements for the previous 12 months, and evidence of business longevity and stability. The timing of this announcement is particularly challenging because it comes during a period when many families have already submitted their sponsorship applications. USCIS has indicated that cases pending as of November 1st will be subject to the new standards during adjudication. This means thousands of families who thought they met the requirements when they filed may now receive requests for additional evidence or even denials based on the updated thresholds. Immigration attorneys across the country are already reporting increased anxiety from clients who submitted applications in good faith under the previous rules. One of the most significant aspects of these new rules involves household size calculations. Previously, sponsors could count certain household members toward meeting the income requirement if those individuals agreed to make their income available to support the immigrant. The new guidance restricts this considerably. Only U.S. citizens and lawful permanent residents living at the same address can have their income counted, and USCIS now requires extensive documentation proving the shared household arrangement. This means adult children living with parents or multiple family members pooling resources will face much more scrutiny than before. There's also a new focus on what USCIS calls income stability and future earning potential. It's no longer sufficient to show you currently meet the income threshold. The agency wants evidence that your income is stable and likely to continue. For hourly workers, this means demonstrating consistent work hours over an extended period. For commissioned employees, showing regular and predictable commission income. For those in seasonal industries, proving income throughout the entire year rather than just peak seasons. This shift fundamentally changes how sponsors must present their financial situation. The announcement also addresses the use of assets to supplement income. Previously, sponsors who fell short of the income requirement could use assets like savings accounts, real estate equity, or investment portfolios to make up the difference. The formula allowed sponsors to count assets at 1/5 their value, meaning $20,000 in assets equaled $4,000 in income. The new rules maintain this option, but with stricter requirements. Assets must be readily convertible to cash within 12 months, properly documented with official statements or appraisals, and held in the sponsor's name with clear proof of ownership. Real estate equity calculations now require professional appraisals rather than online estimates, and mortgage statements showing substantial equity rather than just property tax assessments. For joint sponsors, the landscape has shifted dramatically. Joint sponsors are individuals who agree to accept financial responsibility for an immigrant when the primary sponsor doesn't meet income requirements alone. These arrangements remain possible under the new rules, but USCIS has added substantial requirements. Joint sponsors must now demonstrate not just adequate income, but also a genuine relationship to either the primary sponsor or the immigrant being sponsored. The days of using a distant relative or family friend as a joint sponsor may be coming to an end. USCIS wants to see evidence of an ongoing relationship and legitimate reasons why this person would accept long-term financial responsibility for someone. Active duty military members represent one category receiving some consideration under these new rules. Service members sponsoring immediate family members can still use the lower 100% poverty guideline threshold rather than the higher percentages, but they must provide extensive military documentation, including current orders, recent leave and earnings statements, and certification of active duty status. The announcement emphasizes that this exception applies only to active duty personnel, not veterans or reservists, unless they're currently activated. The implications for different visa categories vary significantly. Immediate relative cases, those involving spouses, unmarried children under 21, and parents of U.S. citizens, face the full force of these new requirements. Family preference categories, which include adult children and siblings of U.S. citizens plus spouses and unmarried children of green card holders, encounter even longer wait times as more cases fail to meet the new financial standards on first submission. The backlogs in these categories could grow substantially as families struggle to meet the enhanced requirements. Immigration advocates have already voiced strong opposition to these changes. They argue the new rules disproportionately impact working-class families and essentially create a wealth test for family reunification. Critics point out that the increased thresholds don't account for regional cost of living variations. Meeting these income requirements in rural areas differs vastly from expensive metropolitan regions, yet USCIS applies the same national standards everywhere. Civil rights organizations have indicated they're exploring legal challenges, arguing these changes exceed the agency's regulatory authority and conflict with congressional intent behind family-based immigration laws. So what should you do if you're currently in the sponsorship process or planning to sponsor a family member? First, gather your financial documentation immediately. Don't wait until USCIS requests it. Compile at least 2 years of federal tax returns, all W-2 forms, 6 months of recent pay stubs, employment verification letters, and bank statements. If you're self-employed, work with an accountant now to prepare proper financial statements for your business. Second, calculate your household size correctly under the new standards and determine whether you meet the threshold. Be honest and conservative in this assessment. Third, if you're close to the line, consider ways to legitimately increase your documented income before filing. This might mean taking on additional work hours, monetizing a hobby or skill, or documenting income sources you've previously overlooked. If you've already filed and are awaiting a decision, monitor your case status religiously. USCIS will likely issue requests for evidence to many pending cases. Respond quickly and thoroughly to any such requests. Consider consulting an immigration attorney who can review your specific situation and advise on the strongest approach to demonstrate financial capability under the new standards. For those who clearly fall short of the new requirements, exploring joint sponsor options now rather than waiting for a denial makes strategic sense. Identify potential joint sponsors within your family or close circle who meet the requirements and would be willing to accept this responsibility. The new rules officially take effect for all applications filed or pending after November 1st, though USCIS has indicated some flexibility for cases already well into the adjudication process. The agency will be issuing detailed technical guidance for its officers over the coming weeks, which means we may see additional clarifications or modifications as implementation proceeds. Staying informed about these developments is crucial for anyone navigating the family sponsorship process. If this video helped you understand these complex new requirements, please hit that like button and subscribe to the channel. I'm constantly monitoring USCIS announcements and policy changes to bring you the latest immigration news that affects real families. Drop a comment below telling me how these new rules impact your situation. Are you worried about meeting the higher income thresholds? Do you have questions about specific aspects of the requirements? I read every comment and often create follow-up videos addressing your questions. Remember, immigration law is complicated and individual circumstances vary tremendously. While this video provides general information about the new rules, nothing here constitutes legal advice for your specific case. If you're facing challenges with sponsorship requirements, consulting with a qualified immigration attorney who can review your complete situation is always the wisest investment. Share this video with anyone in your community who might be affected by these changes. Knowledge is power, especially when it comes to protecting your family's immigration dreams. Thanks for watching, and I'll see you in the next update.